Hey, good morning. Sean Price with Price and Price Realtors. And this morning I want to talk about the hazards of trying to time the market right now. Uh, with the current COVID-19 situation and the high unemployment rate and the fact that the real estate market has kind of slowed down a little bit just in total volume. A lot of people, a lot of buyers that I talk to are considering that they want to wait and see what the market's going to do, or they want to time it better in case prices drop, or they're looking for opportunities to time the market, basically to take advantage of what's going on here. And there are certain hazards that come along with that right now. First of all, it's always speculation if you're trying to time a market, so you have to go based on what you're looking at. As far as current evidence. And the current evidence is that while the volume of the market itself has decreased, it's still in a very strong, stable market, and it's a seller's market. For example, the market report that I did on Monday and that I sent out, that market report showed that inventory is still low, that the window that buyers have with regards to trying to get into properties here in the Northern Virginia real estate market, trying to get into properties without multiple offers, that window is starting to close. In fact, we just had a property go into contract. It was almost a $1.5 million contract, and it was about 3 or 4 days on the market. We were able to get it under contract, and when we ratified that contract, within about an hour, they had a second offer about to come in. So the market is still moving, prices are still holding. So one of the challenges that happens is when you're trying to time the market and you're using the economic changes right now, that can be a little bit misleading, because the economic changes are not happening for economic causes, they're happening for an external cause. So this is not like 2008 and 2009 when the economy was going down and everything was going down. We were in a very, very strong economy before this hit. And, as of today, they're talking about 21 states are starting to reopen their economy in a modified aspect, but it's starting to happen. So we're starting to get back to life again. And it's looking like pretty likely that once we do that, we're going to hit that strong seller's market again, because even now we have decreased inventory and it's not enough for the buyers that are out there. And once we start really picking up the market again, and all these buyers get back into the market and start looking for houses, we're going to have more buyers than we have sellers. So one of the dangers of trying to time the market right now is that we may end up back in that time frame where it's multiple offers on every property. So it makes it very difficult for buyers to get into. The other thing is prices right now are stable. They have not come down, and they tend to, even if the prices may be stable, when you get into multiple offer situations, they end up selling above ask price. So then the prices generally go up. When you take into account in our area, the fact that we have Amazon coming in and we have all these different big companies coming in, this market is a bubble that, when I say bubble, I mean a protected area that will probably maintain a pretty stable price point and probably maintain, this price point going on into the future. So challenges of hoping that the prices are going to come down, it doesn't look like that's going to happen. The other aspect of it is interest rates. That's a big factor, and right now we have a good interest rate in the economy, and they're predicting that it's going to stay low for a while the economy recovers from this, but that will change eventually. So that's going to, that's a concern. And then lending, there are some lenders right now that are tightening up their lending, and that they're tightening up their requirements and they're tightening up their criteria. So timing the market, you might get another month or two down the road, and you may not be able to get a loan because the lending may have changed and may not have responded to the economy coming back yet. So there are a lot of factors that you need to take into account. And trying to time the market, excuse all the noise, we're in a family of 6 here. Trying to time the market can possibly cost you a house later in the future. So right now, what we're looking at stable prices. We're looking at buyers still having the opportunity to get into a property without multiple offers. While the prices are stable, there's still that opportunity to get into properties without as much competition, and interest rates are historically low. So it's still a good time to buy in a good, stable market. So things to consider. If you have any questions about that, please feel free to post below, and or you can email me or reach out. All right, I hope everybody's staying safe and healthy, and we'll see you on the next video.